We are recording.
Great. The FSC's Pension Division is delighted to offer this platform to the Pensions Industry Association of Jamaica and the esteemed President, Mrs. Sanya Goffe, who will be the presenter for today's session. This session is aimed at providing information on the proposals, the expected benefits, and allowing for dialogue on the proposal regarding auto-enrollment into retirement schemes, the power of the nudge. We would like to applaud the association for spearheading this initiative, as well as its long-term commitment to the development of Jamaica's pensions industry. The FSC has embarked on a program of activities aimed at one of our core objectives, to broaden pension coverage in Jamaica, and this PIAJ initiative most certainly is aligned with our strategic drive. The most recent statistics suggest that approximately 11% of the employed labor force participate in the private pension plan industry. Even when we include the numbers of persons participating in the National Insurance Scheme and the Public Service Pension Scheme, the coverage rate is entirely inadequate and must be addressed in light of increasing cost of living as well as life expectancy. While the FSC continues its work towards providing for a framework that allows for micropensions, which is aimed at informal or self-employed persons as well as low-income persons, we will continue to work with all our stakeholders to seek out opportunities to improve pension adequacy and coverage. The FSC remains committed to working together with all stakeholders to ensure a sustainable private pension system capable of safeguarding the well-being of the present labor force and future pensioners. Ladies and gentlemen, I wish you an engaging and informative webinar. Over to you, Tony-Ann.
Thank you, Cornelia. We certainly appreciate your presence with us today. And just to note that Cornelia will be online with us when we head to the Q&A segment. So if you have any questions for her, please feel free to leave them in the chat. At this time, it is my pleasure to introduce the presenter for this afternoon. Sanya was called to the German Manley Law School and the University of the West Indies. She's a head faculty property law, capital markets, and corporate law. In the area of pensions, Sanya provides advice to companies and trustees on all aspects of pensions law, including managing pension risk, plan restructuring, governance, and general pensions issues arising from ongoing activity. She writes frequently on pension issues and is a regular speaker at pension industry webinars, podcasts, conferences, both local and abroad. Sanya is an Eisenhower Fellow and serves as a director of NCB Financial Group Limited, National Commercial Bank Jamaica Limited, Jamaica Producers Group Limited, and the National Insurance Board, as well as RevUp Jamaica Limited. Sanya is also chairman of Stratus Alternative Funds, SCC, and the president of the Pension Industry Association of Jamaica, PIAJ, where she supports the pension reform, education, and advocacy mandates of the PIAJ. Recently named one of the Jamaica Gleaners Distinguished Awardees in Law, Sanya is also a member of the UK Association of Pension Lawyers and International Pension and Employee Benefits Lawyers Association, retirement schemes, the power of the nudge. Welcome, Mrs. Goffe.
Thank you very much, Tony-Ann. Afternoon, everyone. You're cutting out quite a bit, Tony-Ann, so I don't know if it's my side or yours. But sorry.
Thanks. I'll ask my team to work on that. Thank you.
Yeah, I'm not sure if it was my side. Okay, so afternoon, everyone. I feel like I'm going to be under a little pressure now because I do want to ensure we get through everything before 2 o'clock and get a chance to answer some questions. I'm actually going to be looking firstly at just really the retirement crisis that we have, which won't be new for some of you, and also looking at really what underpins auto-enrollment and the success of auto-enrollment and what that nudge theory looks like. And then I'll close off with a summary of what the PIAJ's proposal entails. So the COVID pandemic has affected various pension arrangements globally. The fact, though, is that pension systems were facing significant challenges even before COVID. When you look at statements from the World Bank, OECD, and IDB, they've said that the biggest challenge faced by most countries in Latin America and the Caribbean regarding pension policy is the low coverage of formal pension systems. So our coverage is low. We talk about it all the time. It's hovered between 9 to 11% in the private sector for decades. And when you add employees who are part of the public sector pension scheme, that bounces up to about 18%, but it is, as Cornelia said, completely inadequate. When you think about the proportion of workers that are participating in pension schemes and the proportion of elderly receiving some form of pension income, coverage is overall just too low. And it continues to impact and plague many Caribbean and Latin American countries because of the impact of COVID. Are you guys seeing that on my screen, that little fisherman boat?
Yes, we are.
Okay, good. All right. And COVID, of course, has led to health concerns, economic crises, high unemployment rates, and there's been an even greater downturn on pension contributions because people say, this is really the last thing I want to think about right now. And in fact, at the start of COVID 2020, the OECD had issued a statement that while the future development of the pandemic and its final impact on mortality and pension liabilities are subject to large uncertainty, over the longer term, the newly accumulated debt is likely to put pressure on pension finances. And we see that when we look at the experience in Peru and Chile, where they allowed early withdrawals from their funds as a source of relief for households to support recoveries during the pandemic. And some of you may know that we had looked at that jointly with the FSC, but within the FSC's proposal, there were certain safeguards to ensure that there was no abuse of the system. Though that never ended up actually being fast-tracked into law, the fact is that there were some countries that immediately opened up your pension pot, you could take withdrawals. But what we're seeing in countries like Peru and Chile that allowed it, it had negative financial and confidence ramifications. In the case of Peru, it contributed to downgrades in 2020, and also Chile experienced a downgrade in 2021, and Chile experienced a downgrade in 2020. And in those countries, long-standing private pension funds have been an important part of what supports creditworthiness in those jurisdictions. And so when you found that there were these huge withdrawals, it weakened the pension systems and really resulted in fiscal liabilities. In the case of Peru, the total withdrawals were up to 2021 amounted to 8% of GDP. And in Chile in 2021 was 16% of GDP. So a significant amounts that were taken out. And you see the impact on a national kind of level. And so COVID has already, exacerbated this kind of retirement insecurity that we have going on. And what we're seeing is that, and this is not news, I'm sure for many of you, people typically are living for 2 to 3 decades after retiring. So you retire at 60, 65, you could be facing 30 years of life. And so when you think about that, there's a lot of retirement insecurity that people are facing. That, along with declining fertility rates, you're seeing an increase in old age dependency. And what that means is that fewer younger persons have to support more individuals in their elderly years or in their senior years. And what this means is that it results in this intergenerational dependence. You're looking at your children are expected to look after parents, and therefore they're not able to establish financial independence and resiliency for themselves. And it kind of perpetuates a cycle. of this intergenerational financial pressure and sometimes intergenerational poverty. I've said it a lot in the public space. Many of us will know people who lived great lives when they were working. They lived well, they traveled, they could go out to restaurants, they had a great life. They hit retirement, they didn't adequately save and ensure retirement security, they don't own their home. And it just takes, one unfortunate medical diagnosis to put you in a position where you honestly are facing old age poverty. And so the extent to which one generation can save so that they don't look to a future generation to take care of them will help break this cycle. And encouraging younger persons to save earlier will also have positive downstream impacts for future generations. And I see a lot of investment managers and administrators in the room, and I know you're all doing a lot of work in that area for your respective clients. We see the work sometimes in the public space, but more really needs to be done. And part of what auto-enrollment is about is moving away from just focusing on financial literacy and encouragement and trying to now assist people in a more proactive and kind of forceful and deliberate way. And we'll get into that. All right. And so to improve the sustainability and adequacy of pension systems, a proactive approach must be taken. And what we want to do is implement effective strategies that will assist in saving for retirement as early as possible, but in a seamless and frictionless way. And I want to also just spend a little slide when it comes to women. We tend to think about retirement security as if it's a gender neutral type of issue, but it's not. I came across an article in the Actual Post and looked at some statistics in the UK. And whilst these statistics are UK-based statistics, the underpinning principles and conclusions, I think, are generally applicable. So the headline of the article was, women should start work at 4 for the same pension pot as men. So of course I got up and I was like, okay, I have to read this article. And what it said is that women spend an average of 10 years away from the workforce to start families and care for children and relatives. And as we know, women generally are the ones that take care of elderly dependents and make sacrifices professionally in order to be a caregiver. And as a result, we're subjected to fewer opportunities for career advancement and fewer opportunities for higher salaries. And women would therefore need, so this article said, would need to work an additional 18 years in full-time employment to save the same amount of money into their pension as a working man. Put another way, women would need to work until age 83 to close the gender pension gap. And when we consider that women are living on average 4 years longer than men, which means that women have to save more during their working years, which actually is a shorter contracted span when you think about caregiving, to ensure retirement security, we find that women are at greater risk of retirement insecurity. And so these are not kind of just like, nice to know stats. These are very important pieces of information. And as women in the room, we need to understand how that impacts us personally. And so initiatives that are geared towards financial literacy are important, but I think there is a particular role that needs to be played in advancing curated information for women. And so that's what I want to kind of move into. I want you to understand that we're facing a global crisis. There are countries that it has impacted them on a national level, that we have low coverage, we've had low coverage for decades, and that we have women who are particularly insecure. And so we want to look at auto-enrollment. I want to talk you through what auto-enrollment is. I want to talk about why it works, and then design features and how the design features become important, and particularly important for the proposal that the PIAJ has been advancing. So auto-enrollment is a program which requires employers to enroll employees in a pension arrangement. In some cases, this can be a default fund run by the state, where the employer does not already have an established superannuation fund in which the employee can participate. So let's run that back again. It's a program that requires employers, this will be a statutory requirement, not just an encouragement, but a statutory requirement to enroll employees in a pension arrangement where the employer does not already have a pension plan in which that employee can participate. So through auto-enrollment, persons are automatically placed in the pension plan, but it's not a tax. It's not a, unilateral deduction from your salary, because you always have the opportunity to opt out. So the ultimate control and power for your retirement planning and retirement security remains with you. But it's that first step that's being taken to put you into a pension arrangement. So auto-enrollment, it's not aimed at replacing social security or social insurance schemes. We know that we have a 3-pillar system in Jamaica. The first pillar is the NIS. That's our social security system, but it's not enough to sustain in retirement. And that's why people are encouraged to participate in the second pillar, which is private sector pension arrangements. So that would be your employer pension plans or approved retirement schemes where your employer doesn't have a plan. And so that's what the proposal and auto-enrollment is about, enrolling people into an approved retirement scheme on the basis that your employer doesn't have one already, doesn't have a pension plan. So it's not mandatory, but what it does is it effectively shifts the nature of choice made by an employee from one where they must opt out of a retirement scheme rather than them having to take the initiative to opt into a scheme. So currently in Jamaica, we have what's called an opt-in regime. If you want retirement security, your employer doesn't offer a pension plan, you need to go knocking on VM Pensions and say, Mr. Conroy Rose, can you please enroll me in your retirement scheme? That's the opt-in regime. You have to take that initiative. What auto-enrollment does, it flips that choice architecture and says, no, we'll put you in, and you need to take the step to opt out and not save. So it simplifies the process of identifying a suitable pension provider, because the employer basically will elect a retirement scheme. We have 13 retirement scheme providers. All of them are members of the PIAJ, I'm happy to say. And what the employer does is opt you into, enroll you into a retirement scheme, and it makes it easier to start saving for retirement. And so the solution is removing as many steps as an employee has to take to make it as frictionless and as seamless as possible. And so the reason why this works, this power of the nudge, is that it taps into your kind of irrational and behavioral biases and steers you towards making a particular decision. So let's back it up a little bit. It's a concept that you'll find in behavioral science. I mean, some of you would have read some of these books and articles about the power of the nudge. And it really is a big part of political theory and behavioral economics in terms of why we do what we do, why we make the kinds of decisions that we make, and really proposes a kind of positive reinforcement and indirect suggestions, indirect nudges as a way to influence good behavior and better decision making. So it's a desirable thing. It's about steering you towards better decision making. And I think it's about making subtle changes in the decision-making environment. So it's not about a big stick approach, but you will find that if people are just nudged in an indirect, gentle way, it can actually change behavior. So in the case of auto-enrollment, employees are nudged to save for retirement by being automatically placed in a pension arrangement. But as I said earlier, ensuring they always retain control of their retirement planning by having the power to discontinue or opt out of the arrangement. So I want to give you some examples of nudges that have been very successful across the world. Bullseye. In the Amsterdam airport, they installed small fly-shaped stickers in urinals. Men now had something to aim for, even subconsciously, and spillages were reduced by 80%. Eat Your Veggies. The American grocery store Pay and Save placed green arrows on the floor leading to the fruit and veg aisles. Shoppers followed the arrows 9 times out of 10, and their sales of fresh produce skyrocketed. In organ donation, countries where people, this is an opt-in, opt-out example. Countries where people have to opt in to donating organs generally see a maximum of 30% of the population registering to donate. In countries where people are automatically enrolled in organ donation schemes and have to opt out, only about 10 to 15% of people bother, providing a far larger pool of organ donors. Super downsize me. So McDonald's, we know, would famously ask people if they want to supersize a meal. The opposite was proven to also work. There was a study in a Chinese restaurant that had waiters ask patrons if they wanted to downsize side orders. 33% of customers took them up on the offer, saving themselves an average of 200 calories per meal. And the last one, which is found quite interesting, sex sells. An experiment in South Africa regarding the advertisement of bank loans found that sending material to male customers, which contained an image of an attractive woman, was as effective in loan uptake rates as advertising loans with 25% lower interest rates. So these are all examples, some of them outside of the financial sector, where certain types of nudges, certain types of kind of subconscious nudging you and directing you to make wiser, better decisions have worked quite effectively. And so changing the choice architecture from a default of workers saving when they choose to one where workers save unless they choose not to. So you're saving unless you deliberately choose not to save, can have a powerful impact in harnessing natural human inertia and improving retirement security. So that very same inertia that you find prevailing while people don't take the step to opt in, we're going to flip that and bank on that inertia where people would choose, we're not going to get around to opting out. Studies have shown that workers are 15 times more likely to save for retirement if they have access to a payroll deduction savings plan at work. You know, when you just kind of do a automatic deduction to your savings, 15 times more likely to save. But if you add auto enrollment where you're put into an arrangement, they will be 18 times more likely to save. And a study in the US showed that participation in 401k pension plans among employees increased from 12.5% from a cohort hired before auto enrollment was introduced to 79% when for the cohort that was hired after and were automatically enrolled. Participation jumped from 12% to 79%. And so what we see, as I said, it harnesses that power of inertia and procrastination to keep individuals contributing towards retirement income. And so this little cartoon shows Homer looking at the donuts and saying, oh, they're all the way over there in the back. I think I'll have some fruit. The fruit is right up there at the front. So when something becomes more difficult to access, you find people feel like they just can't be bothered. All of us can think of examples in our own lives for, you know, in one way or another. But the healthy fruit is right there. It's right within reach. It's frictionless. It's easy to access, and you therefore make a better decision. Okay. So that's kind of giving you a nutshell of how it works. And so I want to look quickly at auto enrollment design features. We're going to take questions at the end. So everybody's holding questions. I was going to do a question check, but let me not get off track. Okay, so auto enrollment, like I said, every country has, you know, different design features for their auto enrollment programs. And those design features need to be put in place based on the context of the country, what they're facing, the culture of people, the size of employers, whether or not you want to offer fiscal incentives or not. And so the design features vary from country to country. I want to point this out because at no point is it going to be practical or feasible or even prudent to take an auto enrollment program out of country X and just kind of land it in Jamaica and expect it to work. And so what we have done when we think about the PIJ proposal, we did a lot of research at what has happened globally, what has worked. We've consulted with persons who have established auto enrollment in certain countries, or in the case of the US, in specific states. These are people we've consulted even with, and the person who's considered to be the godfather of auto enrollment. He actually conceptualized it, and we've gotten a lot of very, very good constructive feedback and suggestions around design. And of course, some of the suggestions we know couldn't fly in Jamaica, and some were really good that we felt we could adopt. And so I wanted to make that clear because, you know, we didn't just pull a program from some other country. We were very mindful and thoughtful about what we think could really work in Jamaica. And I'll update you on the stakeholder engagement process in a couple of slides from now, because even when we went through that stakeholder engagement process, we got even more feedback that was very, very important about how we can really refine the proposal for what will hopefully be implemented into law. And so let's get back onto the design features. And so there are certain kind of default parameters that are usually put in place when you look at auto enrollment. So default contribution rate. So you enroll somebody into a retirement scheme. There's usually a default contribution rate where you are starting out at 3% or 1% or 5%. There's usually auto escalation where the contribution rate goes up at a certain interval. Investment strategies, because many of the retirement scheme providers will allow members to choose their risk appetite. And so what's going to be the default risk appetite as a part of your design features? another thought is, are you going to offer any fiscal incentives? What are going to be the benefits to maybe the employer to facilitate the program? Are there going to be any tax relief? Things of that nature go into considering the design features, because auto-enrollment and really inertia and the nudge would only work if employees trust in the security of the pension contributions. So if you don't give people that assurance, and when you're encouraging them to participate or to not opt out, you're going to have a real issue. And so what I think is very positive for us in Jamaica is that we have almost 2 decades of a regulated, established, approved retirement scheme regime. So there's the regulations in place, properly supervised by the FSC. And so it's a system that works. And so when we go to employees and say, listen, there are 13 providers, you know, there are options available. We're not forcing you. This is not auto-enrolling you to NIS where there may be certain reservations or concerns about that. And this is not an NIS program. It's not a social security program. We're able to really encourage people to see the benefits of it because there is an established ARS regime and it's open to all retirement scheme providers to support the auto-enrollment program. So it's competitive. It's going to deepen up retirement scheme products in Jamaica. It's going to nudge and encourage greater sunlight on fees and charges and operations. Right. And so when we look at different jurisdictions, you know, the success from one jurisdiction to another oftentimes turns on those design features and learning from those jurisdictions fed into how we being the PIAJ thought about designing the proposal. So if we look at some country statistics, we'll see that the opt-out rates vary greatly across countries. So at one end of the spectrum, where I call it the success end, we have the US, UK, and New Zealand, and the United Kingdom. Average data in the US up to November of this year indicates an opt-out rate of 34%. That's when you're looking at Oregon, California, and Illinois in aggregate. A lot more states are looking to roll out auto-enrollment, but those have been established, and they tend to be the states that you look to in terms of kind of getting a test, the barometer of how success is going in the US. Now, in these states, they don't offer any financial incentive to employees, and there's no employer mandated contribution. So it's not a tax on employers. Employers don't have to contribute. I personally feel at a 30, and by the way, it's 34 in November, but it's really hovered between a 32 to 33% for a few years now. And so just a third of people opting out is considered to be success. In the UK, it's even better. Around 10% of people currently opt out of their workplace pension. But in the UK, employers are required to contribute on behalf of employees. So if I put in $5 and my employer is required to put in anything from $1 to $5, that's free money. I mean, it's a no-brainer for me to stay and just kind of get my employer contributions. I would say that the PIAJ's proposal does not contemplate mandating employers to contribute because, of course, we don't have a mandatory private sector pension system in place. And so that's, and as I said, we're trying to go with a frictionless approach to implementing the proposal. And then in the Kiwi Saver plan, about 16% as of June of this year had opted out. So that's also a very good positive statistic. And so those are all examples of success. But at the other end of the spectrum, we have high opt-out rates in Chile, in Turkey, in Italy. When you look at the Chile experience, and that's why I'm emphasizing, you really have to look at the context as to why these opt-out rates are so high. In Chile, they had an auto-enrollment program that they changed in about 2019 to make it a program for self-employed workers. Auto-enrollment is not a program for self-employed workers, and I'll get to that in the next slide as to why that is. It works because of the actual auto-enrollment by your employer. So if you're mandating employees and self-employed persons to participate and enroll in a pension scheme, so that was what was happening in Chile, and then you give them the option to opt out, people were going in and coming right back out because self-employed persons don't transition well into something like an auto-enrollment scheme. So they had a high opt-out rate. In Turkey as well, it stood at 52%. That's a few years, it's now increased to 61%. But the automatic enrollment proposal in Turkey competed with some very successful existing pension arrangements, and employees were already contributing to personal pension plans. And studies have suggested that that is why you saw this big opt-out effect, knee-jerk reaction, because they were sufficiently covered by existing regimes. And so the design element impact is important. The employer's level of obligation, the gradual implementation of the policy. So is it that it's, you know, on December 31st, it's one way, and then as of January 1st, everybody needs to be auto-enrolled? That can really affect things. In our PIAJ proposal, we're proposing a staggered approach to rolling it out. The size of the target population is also important. The possibility to opt out or cease membership. So can you opt in? Can you opt back out? You know, how does it work? And the automatic re-enrollment process is a very big part of it. The PIAJ's proposal looks at automatically re-enrolling people at intervals, because when people come out, it's often not because they want to come out forever. It's just that they can't do it right now. They can't make the contributions right now. And so the opt-out decision, usually it's a temporary one. And so to ensure the continuity and sustainability of the auto-enrollment program, part of the PIAJ's proposal is to automatically re-enroll individuals at different intervals. The financial incentives provided, I mentioned the case in Britain where employers are required to participate. So do you get free money? And then also, are there any financial incentives to employers for making these contributions? And then, of course, the simplicity of the process for individuals. You know, the way in which, you know, the public education campaign has been rolled out on a national level. Do people understand it? Do they trust it? Is it simplified for them? Or does it sound like pensions is confusing? I don't want to think about it, take me out. So those are key parameters to explain the relative success of auto-enrollment in reaching high levels of participation in other countries. And so the numbers reflected must be looked at in context as the design features vary from country to country. And just to talk a little bit about self-employed workers, an average of 38% of employed persons in the Caribbean, of the employed population in the Caribbean are self-employed. So about 38% of persons working in the Caribbean are self-employed workers, but only 17% contribute to a pension plan of that percentage. And this is largely due to unstable income of self-employed workers. People say they need to use all their earnings to pay their bills. It's just that the steadiness of the income makes it very difficult to save for retirement with consistency. And that's why auto-enrollment has a great chance of success, because the deductions are from your salary. Every month, the money is coming out of your salary, just like your PAYE deductions. This is not easily translatable to self-employed workers, as we've seen in the case of Chile. And as Cornelia said at the start, micro pensions is something the FSC is looking at implementing. You know, micro insurance is coming, micro lending has moved along quite swiftly. And so all of these, the micro pensions is an approach to attack the issue of low coverage for self-employed workers and low income workers. So that's one of the solutions for that cohort of workers in Jamaica. For self-employed workers, this solution is what we're advancing, which is auto-enrollment. But it's not translatable. It doesn't really work across the board for any type of worker. And so solutions like micro pensions would be the answer or possible solution for self-employed and low income workers. Right? And so those other steps are there. And of course, as Cornelia said, the FSC stands ready to partner with any of the stakeholders that want to advance programs and proposals to improve security, and the PIJ equally stands ready to support the micropensions initiatives of the FSC. Okay, so let's go a little bit into the PIJ's proposal. I mean, I would have talked about it a little bit, and we'd have said this before, that after 60 years of independence, only 18% of the population, when we consider public sector workers, can count on a pension or some form of income stability in retirement. And so poor and vulnerable after 40 years of work, people become dependent on state assistance and the kindness of friends and family. And so we are advancing this program to secure better retirement for Jamaicans. And so, as I said earlier, if you're not in a pension arrangement, you'd be automatically enrolled in a retirement scheme. It's targeting full-time, part-time, temporary, and contract workers. So once deductions are being made, once tax deductions are being made from your salary, that's who we're targeting. Age 18 to 64, persons who work and ordinarily reside in Jamaica and earn more than the minimum wage. This is important, earn more than the minimum wage. We're not targeting persons below. And obviously, people shouldn't be paid more than the minimum wage anyway. 3-year transition period based on the size of the employer. So year one, the proposal is that the larger employers would be required to, start the auto-enrollment program, and then it's based on basically the number of persons you employ. So that's the base of, the determination. Year 2, kind of second tier of employers, and in year 3, the smaller employers. The suggestion is an initial default contribution rate of 3%. Yes, that's low, but also we want to make sure that we don't have this kind of knee-jerk opt-out reaction. So people can wrap their heads around 3%, and then a gradual escalation up to 6% over 6 years. Yeah, so a kind of 0.5% increase, with the ability for employees to increase that number if they wish, or freeze their contribution rate. Because somebody could say, listen, I don't want contributions to be deducted beyond 5%, and they would have the right to freeze it. And the reason why I want to make kind of emphasize here again is that this is not supposed to be an imposition or a tax on employees. We're just starting you out. And so the control around what your retirement savings looks like, the contribution rate, whether you're in, whether you're out, still will remain with you. Oh my gosh. Sorry, guys. I thought you were on that side. Anyway. So you would be able to opt in or out at any time after the a period of, let me back up a second. Okay, yes. So you would be able to opt in or opt out at any time after the implementation period, but you would be automatically re-enrolled after 1 year. So if you opted out in a particular month, so let's say you started to work in January, you decided to opt out in March, you're going to be automatically re-enrolled a year later. There's going to be a kind of standard auto re-enrollment point in time for all persons who had come out. Like with all of us, we know that there's portability with retirement scheme contributions, and so you retain account benefits even with the change of your employer. There will be automatic re-enrollment on joining a new employer. So if you moved into a new employer and that employer didn't have a pension plan, you'll be automatically re-enrolled in one. As you know, with retirement scheme contributions, you're automatically vested, and the obligation is on employers to do salary deductions over and pay over to the retirement scheme. So just like now, if an employer takes deductions and does not pay over, there's a penalty. That penalty would apply as well. So employers couldn't just take deductions from salaries and not pay over to retirement scheme. So that entire enforcement regime would remain for the auto enrollment program as well. As I said earlier, it's supported by any one of the approved retirement scheme providers in Jamaica. Minimal to zero recurrent costs to the government and taxpayers. It really just is employers putting you in the pension plan. And then what we're contemplating is that the FSC would be responsible for oversight of the program as administered and managed by the approved retirement scheme. So it's just like now. FSC would continue to monitor, and there's likely to be a role, of course, with TAJ, the same way the TAJ monitors tax deductions. They would have or could have a regulatory role in ensuring compliance with deductions. All right. So a very small but I think useful case study is that there is an employer-sponsored defined benefit plan in Jamaica with approximately 80 employees. They have typical mandatory employee contribution rates of 5% and optional employee contribution rates of 5%. In that plan, what the employer did or does is automatically deduct both basic and optional. So the employee has the right to instruct the employer to cease deducting the optional contributions at any time. But the first step is taken to say, we're going to assume that your default position is you're deducting basic and voluntary from your plan, from your salary. And 20 years after implementing that arrangement, more than 85% of employees have continued to make optional contributions. Right now, less than 30% of members of employee-sponsored pension plans elect to make optional contributions. So I want you to understand that on your own, people on your own, don't take the step. Less than 30% of persons take that active step to make voluntary contributions. In this plan, they decided to take that step for you, but you could always stop it. So we're not trying to tax you, but we're going to take that first step for you. And 85% of employees have continued to make the voluntary contributions. And so that kind of shift from opt-in, opt-out could be a good indicator and insight on how behavioral science would play and the power of nudge would play out for the PIAJ's proposal if implemented. So, coming down to the end, the reality is that when it's time for people to retire and crunch the numbers, right? We don't want people to worry about how they're going to maintain their lifestyle or even their basic needs. We need to find ways to change the approach of the working population to planning for retirement. And there's a role for the policymakers, the regulators, and the supervisors to create the pathway to encourage this change. And I do think the FSC is doing quite a bit in this area. I think, lobbying for the adoption of statutory auto-enrollment schemes will have a better chance of implementing this mechanism. So supporting stakeholders like the PIAJ in this effort will be important. And we talk about low coverage, not just in Jamaica, but in the Caribbean, and the FSC using its good offices and its influence in its network of Caribbean supervisors and policymakers can improve retirement security or work towards improving retirement security, not just in Jamaica, but also across the Caribbean. And of course, stakeholders and lobby associations like the PIAJ, we stand ready to be a part of that sea change. And I think as well, when regulators and supervisors support initiatives of this nature, it does add a level of credibility to it and a high level of credibility to it, and it builds confidence of participants in the sustainability of the scheme, and of course, reduces the risk of opting out. And so my almost final remarks are that, we need to see auto-enrollment as creating a new generation of investors who will build retirement assets. We want to shift away from that mindset that me pick me on my pension, and so I don't have to think about it. I send them to school, I don't have to worry about it. No, because part of being financially resilient is also ensuring that you give your children a better chance at being financially independent and resilient as well. And although it won't solve all the retirement scheme, retirement security problems in Jamaica, nobody's saying that auto-enrollment is going to be a fix for all our problems. As I mentioned, our labor market is nuanced. We have different categories of workers and different types of considerations. We have to take a multifaceted approach at fixing the solution, but auto-enrollment, we believe, will be a useful tool in targeting those employed workers who are not a part of a pension plan, putting them into a retirement scheme. And a good pension system is a critical underpin of any society, and we think it will have a impactful step towards financial independence. We've seen the success in other countries, and what we know as a fact is that simply encouraging people to save has not been enough. We have to pave the way to better retirement for our people, even if it means that we have to walk and nudge them along the journey. All right, any questions? Goodbye, tension. Hello, tension. That's me.
Thank you. Thank you so much, Mrs. Goffe. We surely appreciate that enlightening and thought-provoking presentation on auto-enrollment in retirement schemes. I apologize that I have to use I'm speaking from another machine right now due to some technical difficulties, but I want to just say that was a brilliant discussion on the pensions crisis currently facing future and current retirees, and your very practical look at how auto-enrollment can be used as a tool to help us build out and build on existing financial initiatives, financial literacy initiatives, by implementing those behavior change programs or nudges that you mentioned. They work in other areas of life, and I'm pretty sure that if applied to this area of long-term savings behavior, we should reap some success. So thank you for your insight on that and bringing clarity, greater clarity to that issue. Thank you so much.
Thank you.
It is now time for our Q&A segment, and we'll be addressing questions posted in the chat. Let's begin with JM. Just want to say that we're inviting our participants today to share their feedback on today's session. Link will be posted in the chat to our evaluation survey. We welcome your thoughts and suggestions. We use them to help us improve on our next event. Okay, on to our questions from JM. Contingent labor, part-time, non-salaried workers face coverage challenges all over the world. What are your thoughts? Sanya, would you like to?
So I think that's what I had touched on a little earlier, to say that, you know, it's a multifaceted approach that we have to take to finding solutions. And so non-salaried workers, part-time laborers, contingent workers wouldn't fall within the auto-enrollment, a solution for auto-enrollment, but there are other solutions out there. So like I said, micropensions is an example, and what big part of micropensions is nudging people. It does use that same behavioral science to make small but very often contributions to their pension arrangement. A big part of what makes micropension successful is, one, support on a national level. So I'm happy to hear that the FSC is really taking this on. And I shouldn't say happy to hear like I didn't know before, but to know that it's, you know, the championing and researching of its feasibility for Jamaica is still taking place. A big part of it is the technological plumbing that supports it. So how micropensions works is, you're enrolled in a retirement scheme. So let's say you're enrolled in Proven or VM, and you get these regular, let's say, text messages that nudge you to say, you want to put $100 to your pension plan, and you don't have to think about it. Sometimes it's paid from phone credit. Oftentimes it's paid from credit. And we have some of the largest rates of mobile phone penetration in Jamaica. And so when you think about just getting on a little nudge to put $100, it feels like it's no big deal, and you get those nudges often, you find that you're building up a retirement account. It may not be a whole lot. Nobody's saying it's going to be money that's going to sustain you for the 30 years in retirement, but it is putting aside something that you didn't have before. Another approach that has worked in some countries is that kind of top up. You guys will know that you go to even our supermarkets here, but you see it often in the US. Do you want to contribute $1 to, you know, whatever, Cancer Kids Foundation, and you don't think about it? You're like, okay, cool. And you top up your grocery bill by $1. So think about the same thing. You get prompted about whether you want to contribute to your retirement scheme, and you just kind of, you know, round up your grocery bill or round up your gas bill. But that works if there's a kind of, like I said, a rollout nationally with a kind of technological interface that will support that. But it's possible. And these mobile wallets that we see being rolled out, those are all examples of technological interfaces that can assist in microinsurance, micro-lending, and micro-pensions. But auto-enrollment is specifically for persons who are, if you call them payroll, people who are on the payroll. But there are solutions around the world for dealing with things like contingent laborers and part-time workers.
Thank you so much, Sanya. We have a question from Debbie. Kindly explain the concept of auto-enrollment. If a person has opted out of the plan, they can be auto-enrolled once they have indicated a willingness to rejoin. I think you touched on that.
So that's the thing. What makes auto-enrollment work is that we're not asking employees to do much or to think about it much, right? We're trying to remove the friction, because once you're asking people to make decisions, you find that they don't make the decisions. So what it is that the auto re-enrollment will be automatic. So if you've come out in the year, they're going to be static auto re-enrollment, a kind of auto re-enrollment date. The day after budget, March 15th is the tax day, maybe March 16th or January 1st. So if people had come out during the year, that's fine, but you're going to get put back in and you can come out again. But what studies have shown is that when you do this auto re-enrollment, people stay, the stickiness, it increases the probability of that stickiness in the plan. Because when people opt out, it's not usually a permanent position on opting out. It's like, I can't do it right now. My mom is in the hospital. I can't think about it. I think this percentage deduction is too material to me for me to make it right now. And so the putting people back in auto re-enrollment, it's been shown to actually increase the improvement and reduce opt-out rates in the long term.
Great. I see Dwight Hamilton with a hand raised, but I'll just ask him to hold a moment while I go to the question from Okima Brown. Good afternoon, everyone. I would like to know who would own the responsibility of electing the pension arrangement to which individuals will be enrolled? Is it the employer or the individual?
Excellent question. So the proposal contemplates that it's the employer. Why? Remember, we're trying to reduce the election, we're trying to reduce the burden and the decision making that employees have to take. Because if you put a form before an employee and you say, choose a retirement scheme provider, they may never choose one. So the employer would be the ones that would make this election. No, nothing prevents an employer from saying, meeting with their employees and having a discussion or even inviting retirement scheme providers to come and make presentations. Nothing prevents them from auto-enrolling into several different schemes if employees, indicate a desire for a particular scheme. But the default position will be, by a certain time, people need to be auto-enrolled into a scheme, and it is the employer to do it. The employer can make that ultimate decision, though they are free to consult, and an employee is free to say, my preference is for VM over proven over BNS over NCB, however they want to do it. But the obligation, the statutory obligation per the proposal in its current form is that the employer would make that election. And that's why the point I was making earlier becomes so important. This is going to push for greater transparency in terms of the operations and the fees of retirement scheme providers, because it's going to be a lot more competitive. It's going to deepen the retirement security market, I think, but it's going to become far more competitive. People are going to have to say, well, who's more expensive, who's cheaper, who provides a better service, what are the benefits in terms of member service and client care, what does that look like? And I think we're going to see a lot more conversation around what services are provided by the different retirement scheme providers.
Great point, Sanya. Just to say that many commendations are coming in through the chat. Appreciation for great presentation by you. Dwight, just allowing you now to raise the issue. You have your hand raised. Dwight Hamilton.
Hi, good afternoon, everyone. Thanks, Sanya, for a great presentation and informative as well. The previous question was one of my questions as well, in terms of, will the person have the right or the opportunity to choose a retirement scheme? You had answered that. My other question then is about cost. You had cited an example of about 3%. And I'm just wondering, with a 3% of a lower, I assume a lower salary, or even if it's the same salary as somebody who's currently paying 5%. I'm just wondering about the cost. How will the cost affect the cost from the retirement scheme? How will that affect the person's wealth, pension assets going forward?
As in the cost charged by the retirement scheme provider?
Yes, that's correct.
So that's not good. That's not changing. So I want to be clear. We're not changing the retirement scheme regime that we have. What we are proposing is just that first step into the scheme and default parameters in terms of default rates, etc. So whatever is charged by Burrito is charged by Burrito. It doesn't change because you were auto-enrolled versus somebody else went in on their own. Whatever VM is charging is what VM is charging. And that's what I'm saying. There's going to be greater focus on what does this cost? What are the benefits of one versus another? And I think that's going to be good for the industry. Right now, people just kind of make these elections. I'm not even sure what are the kind of parameters or determinants as to why somebody chooses X over Y. But it's not going to be a special cohort of people that get charged a different fee. It's auto-enrolling into the existing regime. And that 3%, Dwight, remember that's a starting rate, and we wanted it at a rate that we know it's low in terms of the 3% is the deduction. We know it's low, but if we start out too high, the knee-jerk reaction we think is one that could be quite significant. So we start out at a rate that's palatable. People think they can wrap their heads around it, and we slowly increase. And I can tell you there are jurisdictions that started out too high, or their auto escalation rate was too much, and it created this kind of opt-out, and people just continue to opt out because they're turned off from the beginning. So we're trying not to do that. We're trying to just slowly implement. And remember, you as the actual employee participant can always increase. You could go to the full 20% if you wished.
Okay, thank you.
Thanks, Dwight. Did I answer your question?
Yes, you did.
Okay, good.
Sorry.
Okay, we'll try and speed things up. We're at 2:01.
Yes, we're at time. Yes.
Candice Nelson has asked if the PIAJ has received feedback from prospective employers who would fall within the ambits of auto enrollment.
Camille.
They're Chinese. I'm Chinese. I'm so Chinese. Yeah, but
That's Candice Nelson.
Has the PIJ received feedback from? Yes, so we've met with the Jamaica Employers Federation and the Caribbean Employers Federation. We've gotten very good feedback. Of course, I'm not meeting with individual employers. That's just not feasible. So the presumption is when I'm meeting with the Caribbean Employers Federation and we're meeting with the Jamaica Employers Federation, we're meeting with employers. That's the assumption we make. And we've gotten good feedback. I'm telling you, we met with the JCC, PSOJ, AmCham, JAMPRO, Employers Federation, the trade unions, Confederation of Trade Unions, the BPO sector. We've gotten we met with the BOJ, FSC, TAJ, Ministry of Labor, all very good feedback. And as I said earlier, not without constructive critique on the proposal. And we definitely have identified ways in which we can refine it. And that's why it's so important to have the stakeholder engagement. The next step is to get a meeting with the Ministry of Finance, which we've been waiting for some time. But we're getting a meeting with the Ministry of Finance and try and get that buy-in. Because that would then be the next step to hopefully set in place a legislative committee or cabinet committee of some sort to take it further. And in terms of timeline, I saw somebody ask a question about, what's the likely timeline? A lot will turn on when we hear from the Ministry of Finance. But I don't think it should take very long to implement. But, as Cornelia will tell you, a lot of these things in terms of implementing legislation, a lot of it is outside of our control. So we would like to think we'll get the green light from the ministry, maybe 3 to 4 years, but it really is hard to say. When I say, and I'm factoring drafts of the legislation and review and feedback and public discourse and all of that, but it really is very hard to say at this point.
Excellent. Leonie Andersonita is asking whether currently there are different, she's saying currently there are different KYC requirements for joining an ARS, and are there any discussions as it relates to waiving these requirements?
Right, thanks for that question. No, because again, you're auto-enrolling into the existing framework. So there's no special treatment for the people who are auto-enrolled versus people who go and enroll on their own. And so if the decision is to auto-enroll into VM, then it's the VM KYC requirements. If the decision is to auto-enroll into Sagicor, it's whatever those requirements are. But the expectation is that once the auto-enrollment takes place, Sagicor or VM will have their representatives come and they will, as they do normally, assist with the process, especially if it's a large number of employees from a particular organization. I would expect that they would devote the necessary resources to supporting things like the KYC requirements. I think that's an excellent question, by the way. But it really, I want all my answers on to just kind of reinforce a particular point. This is not creating a new regime within the pension system. This is not, there's no special set of considerations. What we are doing is taking that, we're proposing that the employers be required to take that first step. But it is expected that it will result in some level and some degree of transformation for the retirement security industry for the benefit of members.
And just Sanya, if I'll be permitted to add, as it relates to KYC requirements, that's something we're currently looking at and re-examining under the micropensions framework, which might be beneficial to industry as a whole.
Okay.
Thank you both, and thank you, Cornelia, for that clarification. Camilla Paris Campbell is asking, could you say what percentage of the private sector has pensions enrollment schemes?
Can you say what percentage of the private
sector is sponsoring a pension plan or pension arrangement?
Oh, you mean the ones that are, what percentage of that 9 to 11, that 11% are actually based on employer plans?
Camilla, would you care to clarify your question?
Sure, thank you. And great presentation, Sanya. I was asking if you could say what percentage of the private sector currently actually sponsors a pension plan right now. So not just overall.
So, right. So I can tell you the number of pension plans. I think Cornelia reminded me, there are about 800 in total, 800 and something in total. But in terms of the active ones, we're at about 300, a little bit more than 300.
Closer to 400, a little
400 active plans, right? But remember though, Camilla, we have to be careful because those are 400 active superannuation funds, meaning employer-sponsored plans. But you still have employers who don't have their own plan, but enroll their employees in a retirement scheme. There are some employers who do that already. And so distilling the statistic is a little complicated, because there are employers where they say, I'm not going to set up my own pension plan and find trustees and get registered. But what I will do is contribute to a retirement scheme and deduct from your salary a contribution as well. And so I don't believe we can really separate it in that way, but we do know that in terms of private sector coverage, we're looking at about 11% of the private sector that's covered.
Okay, thank you so much.
Did I answer the question?
Yes, definitely.
Okay.
Great. Michelle Smith has posted this question. Wouldn't the principle of choice of scheme be removed if this decision is taken by the employer? Additionally, based on KYC compliance rules, wouldn't a signature of the employee be required? Is it that a signature would not now be required?
So I love these questions in terms of operationally. So what happens is that you're going to get enrolled, right? So the employer would contact VM or contact BNS, whomever, and say, we have these 50 employees based on the requirement on the law. We have to statutorily enroll them. We've chosen VM and we're going to enroll. I'm conceptualizing, and you guys who are on the ground operationally, tell me if this can work. But conceptualizing that they would send over names, TRNs, and contact information for these individuals. It would then be that these forms are populated, these individuals are contacted, there may need to be some kind of contact with them directly to get the final stages of enrollment completed. But it can't be that, that's the first step that's required, getting them, selecting the plan and putting them in. And then the employer would be expected, and that's probably something we have to make sure is a requirement on the statute, to provide whatever information is necessary to the retirement scheme provider to facilitate enrollment.
Thank you. Moving on. This is from Camille Myrie. My concern is the employer. How do we get their buy-in or nudge them, especially since it will not be mandatory?
No, man, that's the point. It's going to be mandatory for the employer to have to put them in a scheme. And there will be penalties for non-compliance. That's the proposal. Right? So right now, all it is that if you went to your employer now and you said you had a standing order that you wanted them to facilitate, or a bank loan that you wanted deducted from your salary, the employer 9 times out of 10 is able to facilitate that. It's no different. It's just payroll deductions into a retirement scheme. And that, but it would be not an option for the employer. The employer would be required to do it. So what's not mandatory, Camille, is that it's not mandatory for the employer to contribute. It's mandatory for the employer to enroll you in the scheme. And it's not mandatory for the employee to stay in. They can come out if they want.
Great. Yes, Debbie is asking if this presentation can be shared. I believe you would provide.
Yes, I usually prepare what I call a circulation deck. So my slides are a little different than what I would share, but yes, this is substantially the presentation. You will have it, yes.
Thank you for that. And our final question from Okima Brown, it's a follow-up question. While the intent is to eliminate the friction on the part of employees, this may possibly introduce greater competition, especially for retirement schemes, which you would have alluded to earlier, which may have already had a foot in with some companies. What are your thoughts?
No, that's an excellent question, Okima, because what you will likely see is that an employer who already has a relationship with a financial institution is likely to just say, listen, I have the relationship, I'm probably satisfied, as mentioned earlier, certain KYC requirements, there's a trust factor, there's a confidence factor, and so they'll just auto enroll in a scheme that they in a retirement scheme provided with a financial institution they already have a relationship with. And that's fine too, that's not a problem. It's just, and that would probably assist the employer in making, better decisions as to the retirement. It has a better basis for the decision that it makes. And so, how the market forces play out will be yet to be seen, but nothing would be wrong if you said, listen, I bank with Scotia. Scotia has a retirement scheme, and it's going to put everybody in Scotia. And nothing is wrong with that. That actually might not be a bad thing because it makes the decision-making process for the employer so much easier and smoother. But there will be circumstances where it will be disruptive, and that will actually be disruptive for the good of contributors.
Thank you, Sanya. And we want to thank all our participants for what was very exciting and engaging discussion on this issue. I hope you all found this webinar to be very enriching and helpful. Just a reminder that we are inviting your feedback on this webinar today. There are links posted in the chat. Feel free to share your feedback with us. Thank you for your interest, and of course, thanks to our speaker, Mrs. Sanya Goffe. Thank you to our Senior Director, Cornelia Harper-Peck, also for sharing time and expertise on this very important issue of improving long-term savings and improving retirement outcomes for Jamaicans. Please feel free, if you did not get a chance to ask any burning questions during this session, please feel free to reach out to us. You can email us at inquiry@fscjamaica.org. You can also call our numbers 876-906-301022. Until we meet again, do enjoy the rest of this afternoon.
Thank you. Bye, everyone.
Bye.
Bye, and have a good day.
Bye.
Bye. Have a great day.
Good.